Hello, everyone, and welcome to the Health Go Live webinar series. Today's episode is brought to you by our friends at Foley & Lardner. Just a few housekeeping items to go over. We would like to remind everyone that the Q&A feature will be available, so feel free to send in those questions for the panelists throughout the discussion. Stay on after the webinar to create some festive fall cocktails with master mixologists Natasha and Rich. And with that, I will throw it over to our moderator who joins us from Foley & Lardner, Chris Donovan.
Thank you, Debrel, and welcome to today's webcast on trending a record year in digital health. And I was just thinking about the title of this. We're more than trending. We've actually exceeded the highest, next highest year in terms of overall investment by a couple $1 million at $9.4 billion. So really exciting times. We got a terrific panel today of both venture capital, private equity, and strategic investors. And hopefully during the day, we'll kind of discuss some of the recent transactions that we've seen, some of the trends, and frankly, some of the interfaces of these various layers of capital. So with that, I'd just like to introduce today's panel. And maybe I could just start with you, Catherine, and move over to Julie. And then Rich, if you guys would just introduce yourself briefly, that'd be terrific.
Thanks. I'm Catherine Wood. I'm a private equity investor with TPG Capital in San Francisco. And just for context, healthcare and technology have been our most active areas since the firm was founded. And we've invested in companies like IQVIA, we're in for over 15 years, WellSky, which is in the electronic medical records space. And right at the start of COVID, we bought the largest outpatient psych and telepsych provider called LifeStance. Glad to be here.
Thanks, Catherine. Julie? I'm sorry, Rich. I'm going order.
Yeah, hi. So this is, my name is Rich Matera. I'm Chief Development Officer at United Health Group. So I'm in charge of the M&A function as well as a lot of the different development activities. Like a lot of strategics, we also have a venture arm, Optum Ventures. And we've done a number of acquisitions and investments in the digital health space in the last year. And the pipeline is quite full given all the market valuation. So looking forward to the conversation.
Thanks, Rich. Julie?
Yes, and hi everyone. I'm Julie Yu, General Partner at Andreessen Horowitz. We are a Silicon Valley-based venture firm that invests across all sectors and all stages. But we do have a dedicated fund and operating platform in the healthcare domain. The majority of us at the firm are ex-founders, including myself. And within healthcare, we back the best founders using software to go after the way that we access healthcare, pay for healthcare, and experience healthcare. Looking forward to the conversation today.
Thanks, Julie. Thanks, Rich. Thanks, Catherine. Maybe just started off, I just sort of reflecting we have come a long way from a couple of years ago in terms of digital health investing. And we were all just talking yesterday. We could probably spend this entire session discussing what, in fact, is digital health. But I think for the purpose of the discussion, we're talking largely about some of the on-demand digital services, obviously telemedicine, some of the R&D applications, wellness, fitness, those kinds of things. But I guess question for the group, I remember a couple of years ago at our firm, we were, representing companies that were getting angel investment and sort of early stage Series A rounds of financing. And recently we've seen some significant mergers, obviously with Livongo and Teladoc, Amwell going public, Accolade, et cetera, some huge, investment slugs, Zwift, other examples. I guess using a baseball metaphor, I'd be curious to know what everybody's thoughts are in terms of what inning we're in terms of sort of the overall investment cycle. Are we still on the uptick in terms of significant new fresh capital? Are we sort of a little bit more on the consolidation side, or are we somewhere sort of in the middle, or all of the above? So maybe start with you, Catherine.
Yeah, I think you'll see a lot more. I mean, just to pick on one recent thing we've seen, SPACs feel like they're the flavor of the month now. Kind of came out of nowhere, just massive capital formation. And you got tons of folks looking for deals, and healthcare and technology have traditionally outgrown the economy, been two of the most resistant areas in recessions, and so I fully expect you'll see more of that. But It's pretty interesting because SPACs used to have a little bit of a taint. If you were a high quality company, it's not a route you'd want to take. And, part of the reason it's become so popular is the fees are so high, and the founders, it's so lucrative for them. If you contrast that with even a few years ago, there was criticism even of traditional IPO fees where folks like Spotify were pursuing direct listings so they could get around that. So it's just kind of surprising how the pendulum swings there. But I have to say with SPACs, I have been just absolutely stunned by some of the valuations you've seen. There's recent deals I'm aware of where the SPACs were willing to pay double or more what we as private equity were, measured in the billions of dollars ahead of where PE saw value. And, in the past, sometimes you'd see that with strategic acquirers who had synergies. But it's really striking to see that here. And, I'm sure there'll be a lot of really good SPAC deals, but I think there'll also be some really high profile mistakes over time too.
Rich, I know you were talking yesterday a little bit about valuation concerns as a strategic. Yeah. I'd be curious to know what your thoughts about the baseball metaphor, and then maybe curious what you think about SPACs as well.
Yeah, so I think we're in the early innings. I mean, I do think there's a lot of innovation going on in the digital space. And the barriers to entry are pretty low, and you're seeing a lot of capital chasing a lot of great ideas out there. I think there is going to be, I think there's still some real estate going on where you get a number of people, especially I look in the behavioral space in telehealth. You've got a lot of players coming out there, Talkspace, Sandbello, Ginger, the number of these things where I think at a certain point it becomes a consolidation play, but I think right now it's still a building play. I think it's still early innings. And you're starting to see a lot of the online companies like a GoodRx or Livongo Telehealth now trying to build the wallet, right? They've kind of gotten the consumer acquisition up front, and now they're trying to build the wallet and how they can get more people to once they get to their site, do more things on their site. But I do, as Catherine said, I do get concerned about the valuations. I mean, we talked to a number of people who see GoodRx and Accolade, and they want those type of valuations. GoodRx is like still trading at 45 times their revenue, or 30% on a forecasted basis. And, and when people talk to us about, well, we're looking for stuff like that, we just kind of snicker and say, well, you're not going to get it from any buyer, whether they're strategic or PE. No one's going to pay that kind of stuff. If you're really looking for those type of multiples, you're going to need to go the public route. So that's the only thing that concerns me about being the early innings is the valuation kind of overload going to tamper down some of that growth prospects, as people just aren't going to pay those valuations, and you're only leaving a public market potential. And I agree with Catherine. I think it's going to get overspun, and I'm looking for the go private wave of SPACs in the future. That's going to come.
Julie?
Yeah, so using the baseball analogy, I feel like it's either, the baseball game started many, many years ago, and we had this very long rain delay, and now we're finally in like the second or third inning, or that like the last 10 years was actually spring training, and now we're sort of in the first few innings of kind of the real game. So either way, I mean, I think I go back to a quote from one of my partners who talks about how, anytime there's transformation in industries, the first version of things will be a lot of, doing old things better. And I think that's kind of the era that we're in now, where we're sort of early to midway through, how do we just take care models and service models that already exist in the offline universe, and then use technology to just do them 10x better, whether it's, in terms of scale, even customer service, obviously cost structure, things of that sort. And that could be, a 10-year cycle of just doing that. So perhaps that's sort of game one in the World Series. And then the second game is really, how do you actually get to doing things that we couldn't do before, right? And actually reinvent care models. And I don't think we've yet seen what that could look like, because we're still in that sort of the phase of really laying down kind of fundamental infrastructure in the market, as Rich alluded to, that, will, just unlock the potential of what exists today, let alone, sort of set us up for new things. With regards to valuation, I think it's And of course, at the risk of sounding like the Silicon Valley investor in the room, I think I would separate out, I guess, valuation from, multiples for sure. I do think that there's an element of, we're all kind of defining how to value companies in digital health, right? These are not exactly just software companies. These are not exactly just services companies. They're consumer, but they're also enterprise. So there's a lot of, sort of hybrid, dynamics and components to what these companies look like, which is, what makes them so interesting is that they really do sit at the intersection of so many existing sectors. And so I certainly have seen, and I think, what's a lot of what's happening right now is just people are figuring out how to value these companies appropriately, which is, why we see a lot of flux in valuations and multiples and whatnot. But, at the end of the day, we are talking about an over $3 trillion market where, if you can make the case that for any dollar that's spent today, we can bring that down to, let's call it 90 cents, but, the margin associated with that 90 cents is, multiples of what it is today, then, presumably there should be businesses that deserve, those kind of valuations if they are able to sort of demonstrate those metrics.
Yeah, I mean, I think in some ways it kind of goes back to this definition of digital health, right? That it's changing. In some cases, it can be just shorthand for delivering a high quality consumer experience that's kind of consistent with what people have come to expect in other parts of their lives. It's not just software with 90% gross margins. So that is part of the challenge, right? And you see these high flying public companies, with a significant physical footprint like One Medical or a big balance sheet like Clover, and you kind of say, 2 years ago that you would have called that a provider, or you would have called that a payer, and now it's digital health, and it's for a good reason. It's, as you're saying, it's kind of this first inning of doing old things better, but it is a tricky thing to know what the right paradigm is, because those companies trade on revenue multiples and they would have traded on earnings multiples 2 years ago.
Now that we've opened up the valuation whoopee box, I can't hesitate but not to get into it a little bit, because we've seen a couple of different models with a lot of the digital health companies. Some of them are focused a little bit, like you said, Catherine, on the consumer experience, but a lot of them are focused on cost savings and bringing sort of better outcomes, particularly from the payer side. Others are just growth model type platforms. So we've been working on a telemedicine primary care company that largely services a Medicaid population, and we're seeing margins in the 20 to 30% area. And I'm seeing some valuations and scratching my head. I mean, historically, Medicaid as a payer, from an investment standpoint, wasn't the top of the food chain by any stretch. But this company has a model that really indicates that they can significantly reduce costs and ramp up extremely quickly on growth. So I'm curious, from an investor standpoint, when you look at valuation, this is kind of an open-ended, unfair question, but how do you parse it out? Do you look at growth? Do you look at cost savings? Do you look at a combination of the factors? Do you look at multiples? And maybe that's why we're seeing such variety in the valuations out there in the market. So maybe just throw that out to the panel. And I'm happy to start with you, Catherine, but anybody can chime in on that if they want.
I think it is kind of a tricky analysis, because you don't point to one thing, right? My impression is sort of the dominant features are a big market opportunity and demonstrated growth are kind of the common factors. So in your Medicaid example, right? I mean, no question, that's a huge problem. And if somebody's shown that they have a mousetrap that can solve that and they're growing, I think that people will give them the benefit of the doubt, at least for a period of time. I do think that eventually, and I don't know what the time horizon is on this, you want to see that profitability can be there too. But I do think we're at a moment where people are much more forgiving of kind of traditional unit economic measures and are more in that, big idea, big market growth.
Rich, Julie, anything to add from your side?
Yeah, so I mean, from us, we come at it a little differently, obviously being a strategic. So while we look at obviously valuations and we look at the growth, we look at whether this would give us a competitive advantage if we go after a specific, either investing in a company that we think has got a nice long runway and is kind of where healthcare is going, or we think it just fits a strategic niche for us. And, we tend to, as many big companies do, we tend to outsource our innovation in a lot of respects. We do a lot of it internally, but we also will acquire it into the market. So it's kind of a strategic fit for us. Growth is an important factor for us. I think we are always mindful of the fact that healthcare costs too much overall in society. And we are a scan set companies that are having long-term. I don't think you can have companies in the healthcare space that have massive margins, because that means it's coming out of either the government's pocket or a payer's customer pocket, but the payer really is going to push that down into premiums, right? So it's ultimately going to go into the consumer pocket. And you're starting to see a little bit when you get certain financial advisors come in, investors come in and try to, no offense, Catherine, but you try to arbitrage the inefficiencies in healthcare and the pricing model and the supply chain. And then what happens is you start getting the political pushback, and you're seeing a little bit in the staffing companies with ER docs and anesthesiologists. And so we're always a little bit knowing that ride's going to come to an end, because no one's going to allow across the board everyone to make 40 and 50% margins in healthcare. That means someone's overpaying. And so that also skews our view a little bit about what these companies can really produce longer term.
Yeah, just to respond a bit, we're fortunate not to be I think we've always been things like out of network, and there are always sort of these profit pools in healthcare, right, that don't make any sense. I think there are parts of pharma supply chain like that. There are parts out of network that just doesn't make any sense, and they persist for long periods of time until all of a sudden they don't. And so I do think you have to be really careful about that. And it's also a bit about being on the right side of history. I do think with some, where I might disagree a little bit is with some software services or technology companies where the ROI is so tremendous, the value you're delivering is kind of commensurate or with the return you're earning. You could see that sustaining for longer periods of time, in my opinion, because you are net taking cost out of the system rather than capturing value from a payer. So I think there are probably different cases where it can apply.
Yeah, that relates to what I was going to say, which is, so we're, I'm a early stage investor. So, a lot of what drives us is just growth, and return potential against the overall, scale of the market and whether that market is growing. And we do think about, are you a company that sells solutions to incumbents? So are you selling to payers, providers, enabling them to run their businesses better, which largely take the form of either software or, some sort of managed service, to Catherine's point? Or are you a full stack player that is competing with, established providers and payers for, consumer business and just going direct to patients? And obviously the margin profiles are very different in those two universes, and that's a lot of what dictates, how we think about that. But I definitely agree with Catherine that we are seeing opportunities, I think, for a new wave of innovation around software platforms, because everyone is still relying heavily on legacy solutions that were just not purpose-built for today's modern care delivery models or payment models, et cetera. Every single value-based player that we see is either taking something off the shelf and spending inordinate amounts of money trying to customize that software, or just building it from the ground, full stack. And that's where we see opportunity for a next generation of tech players to build that next operating system for true value-based, consumer-centric, non-fee-for-service, kind of chassis type healthcare, where the players may just ultimately be SaaS companies. And there's enough there's enough players now in that game that it could be an actual viable go-to-market strategy.
Super, and that's a perfect segue, Julie, for one thing I wanted to talk a little bit about, and I talked about it at the top about defining the digital health area, and I think it's really hard to, now that you talk about SaaS companies and sort of just pure play technology companies, I'm curious to what the panel thinks in terms of, you wouldn't be a decent moderator if I didn't ask, and I think there are people out there asking questions already, what are the areas that you all are focused on in terms of, you think there's further growth and perhaps valuations aren't quite as hot, and there's some maneuvering room for additional investment growth and valuation, and perhaps some areas that may have become a little bit overheated. And as I said, yesterday we talked about different areas of on-demand healthcare. We talked about fitness and wellness type of applications. Rich mentioned behavioral health, which is a whole other area. Some of the companies we're seeing are just pure tech companies. Others are sort of hybrid, provider tech. I guess an open-ended question, where are the areas to avoid right now from an investment standpoint? Where are the hotter areas? Where do you all, have you been all focusing your time? Catherine?
Yeah, I mean, I think, behavioral health is an area we've been really active in. As I said, we made a big investment in an outpatient psych and telepsych provider right in the teeth of COVID. So we clearly have a belief that this isn't just a temporal, but a durable need. And, in the case of behavioral health, there's just, well before COVID, certainly there'd been destigmatization and, curious to get Rich take, but I think that a broad recognition of the comorbidities with physical health and the costs, it adds to the system. And so there's so many aspects in which it's just a win-win. And the nice thing about COVID is it helped open up some access in that last mile of getting care. There's still a shortage of psychiatrists, but telehealth and the just accessibility through other delivery models, I think, is a good example of something that will be durable post-COVID. I think that, as with many parts of healthcare, there'll be a healthy mix of physical and digital. But for me, this is an area that certainly will be durable over the long term. And it's a trend that was already going, but just has accelerated during COVID.
Rich?
Yeah, for us, it's, I think it has a lot to do with, digital really is facilitating consumer-centric healthcare, right? So really the consumer driving their decision-making you see with GoodRx. I think that's why a lot of people are excited about that and think they have a lot of area to grow. And once you build that consumer trust, that's why you see some evaluations with a 23andMe and some of these kind of consumer acquisition front ends. You can do a lot with them on the back end once they build that consumer trust. And so we're spending a lot of time. That's where we think healthcare is going, from on-demand health insurance to a lot of the telehealth players to fintech getting into healthcare in order to try to help eliminate some of those friction points within how money flows, how providers are have to get that last dollars. It's easier to get it from the payer. Usually it's from the patient and co-pays and balance billing and all that kind of stuff. So helping them to deal with that, that's really more consumer driven. All it helps the provider and the payer. It's really the end game is to really help the customer experience, the consumer experience. And that's where I think digital can give you a much better opportunity to kind of close those gaps, because I think they're less institutionalized from a payer perspective or a provider perspective, and they can really be disruptive. And that's kind of what we get concerned about. And that's why we're focusing our time there.
Julie?
I wouldn't say there's anywhere that we're not sort of looking. I mean, there's just so much opportunity in this space. I would say, a lot of how we slice the universe is by patient population. So I think a lot of the innovation that we've seen around this on-demand construct or virtual care has started at either the low end of the spectrum from an acuity perspective, so obviously urgent care, primary care, or chronic disease management in very specific areas like metabolic or mental health, as we've talked about. So we think there's still a tremendous amount of headroom in those areas. I think the question for us there is always around what is the theory of defensibility in the long run for any given player, and what are kind of the elements of both the product and the go-to-market strategy that sort of manifest that. We also think a lot about what distribution channels make for viable insertion points for new startups. And so, I think we've now seen a lot of companies sort of catch on to the fact that, yes, you can certainly go direct to consumer, and no one would argue that patients themselves certainly want and, need a better experience. But obviously there are only specific pockets where, out of pocket spend is sort of has a critical mass enough for that to make sense. That said, I think, digital health companies are, now starting to understand how to ride the reimbursement rails, as I like to say. So, how do I just be a full stack provider and, credential myself with payers the same way that any traditional provider would, and, just take reimbursement as my main form of payment? How do I go through the employer channel, which, we certainly view in many ways as kind of the tip of the spear for where, a lot of experimentation happens around what kinds of care models could ultimately then be absorbed, through payer and through provider channels over time, and sort of be carved in to the broader medical benefit. So, we're spending a lot of time in sort of the employer and the payer channel looking at that dynamic. And then I would say from a product perspective, some of the areas that we're excited about, certainly, digital clinics, digital pharmacy has obviously been one of the huge hot areas, I guess, to use your parlance, Chris, where I think, again, a lot of the activity has started in either low acuity spaces or even, places where one might argue are sort of subclinical, sort of lifestyle type medications and whatnot. But, many of the sort of more sophisticated players in that space, I think, are being very thoughtful about how to use that as a wedge into a broader set of care delivery services that do really, get at sort of core, primary care or chronic disease management type solutions. So I think pharmacy is a great, sort of wedge that has high enough transactions and engagement motion that, that can really engage consumers in a sticky way. We also love fintech for healthcare, as Rich mentioned. I think that's whether it's on kind of the B2B revenue cycle side or patient payment side. We've made a number of investments in those domains. And then the last thing I'll mention is it kind of gets to what I said earlier about the next operating system for kind of the next generation of virtual first care delivery providers. This notion of sort of the platform as a service concept. So TruePill is probably one of the sort of most well-known versions of this, where they've taken the entire kind of operating model of a pharmacy and turned it into an API, such that any digital health company can literally just write a few lines of code to plug that kind of service into their care model. And I think we already are starting to see the emergence of many of those kinds of companies, whether it's in pharmacy or lab, or even like phlebotomy as a service, to go into people's homes and take that part of the value chain out of the equation for incumbents. So that's another exciting area that we're looking at quite a bit.
Yeah, Chris, I'm actually, I might steal your mic for a second. I'm just curious, Julie was mentioning some of these employer channel models, and Rich, I'm just curious, in your seat, how do you all think of those, which could be construed in some cases as competitors, or, sort of something new for you to think about?
I think, well, I mean, it's been tried and true in a couple different areas, right? First, there was the whole PBMs who decided to go try to outsource and kind of discouple from the health insurance company who was going to go and sell into an employer channel and say, listen, we'll do all your medical benefits, plus we'll take care of all your pharmacy benefits, and it'll all be one bundled. And then some of the PBMs started saying, well, we can start going directly to those employers. And that was really hot for a while. I would tell you it's coming back in a much more consolidated offering. So that's kind of run its course. I think you're starting to see a lot of some of the clinical stuff go directly to employer, and you're starting to see some COEs for oncology or cardiology, and some of the really big employers like Walmart have sign on some of these things. I think it's I think you'll always have those niches, but I think from a long-term perspective of employers don't want to get in. They want to get out of the healthcare game, right? They already spend too much time in their benefits department, basically taking care of, and they're actually, starting to get fed up with it and pushing it more out to people to manage for them. So to start taking in all these outside vendors and manage all these different elements of healthcare for their employees directly, we don't really see a huge trend in that.
Actually, the area that we're seeing a lot of interest in is employers, bringing in their TPA, and then the TPA in turn hiring someone to do, typical medical managed services, to manage costs, to provide access to telemedicine, almost as a bolt-on to the TPA services. So, but just I think it was Julie, or maybe it was you, Catherine. We were talking about, kind of B2B and B2C, and one thing I'm kind of curious, given where we are now in the investment cycle with digital health, and we had a big merger this year, obviously, with Teladoc and Livongo, kind of each coming at this from a slightly different standpoint. Teladoc really being sort of more urgent care, telemedicine, and Livongo disease management, and trying to bridge those together. Are we at an inflection point where we're going to start to see, let's just say in telemedicine or in certain areas of digital health, the next Google, where there's going to be a dominant player, and the sort of investment angle for a lot of companies is going to be to sort of supply into those big cos? Or do we think there's plenty of those kind of platforms out there that compete for business, and we're just, to go back to the baseball metaphor, we're just in the early innings of that? Maybe start with you, Julie. I think that's something you've talked about before.
Absolutely. Yeah, no, I think the market's changing. So I think part of the reason why you can, and we believe that you will see more dominance, kind of at a national scale on the provider side. We already obviously see that on the payer side with the likes of United, but so much of what has constrained the provider side from being able to scale is the fact that we have provider networks, right, that have historically been limited to local geographies, by virtue of literally which doctors practice or have a clinic within 20 miles of my home, and that's really the big unlock for virtual care, right? Is that no longer is geography a constraint to how we define physician networks and therefore the demand side of the equation. So I think that's been the big unlock that will lead to the creation of companies that operate just at an order of magnitude or multiple orders of magnitude larger than what we've seen in the past with regards to patient care. And so that's what I think Teladoc is an early version of that. And that goes back to our baseball analogy, where I think they're, because they were the first, to sort of get out into the public markets, I do think that there was a bit of scarcity premium placed on them, right? Because if you wanted to bet on virtual care, they were, one of a very small number of things that, you could, sort of buy into. And so I think they'll start to see more competition as more players come out. We obviously saw a bit of that with Amwell, obviously a very different business model, but I think with HIMSS, obviously out there with their SPAC, et cetera. But I do think that because of the opportunity to achieve truly national scale, that's what's going to enable there to be sort of these behemoth digital health companies that could be, I would love to see them get to Google scale.
Catherine, any thoughts on this? Rich?
Yeah, I mean, for me, I agree with Julie in terms of where it's going, but I think it's kind of too early to declare, Teladoc a Google or something. That there's still just a lot of, I think there'll be a lot of innovation. There probably will be more consolidation, but, part of what made the search engines kind of end where they did is just the very, very powerful network effects. And there's certainly some of that in some of these companies you're seeing, but I also think there are aspects where, on the provider side, some of the dropping of barriers, like Julie was mentioning on the networks, will make it a lot more competitive than it once was. And so it's a less obvious sort of winner take all, and it may kind of be something that takes some wind out of the balloon from a profit perspective, which would be a good thing for consumers. But I wouldn't be surprised if it follows a slightly different course, I'd say.
Rich, any thoughts from you?
Yeah, I agree. I'm kind of leaning more Catherine, as I think you'll find some bigger players. And obviously, I think it's most of the companies out there, the Teladocs, the Amwells, the Doc on Demands, I mean, they're still relatively small, and I think they'll grow and you'll have some bigger players. But I think the industry is really fragmented. I think it's to be easier for people to kind of stand up their own. Providers are, we obviously have a big provider part of our business on the Optum side. And, you still have a lot of providers who like to be independent and they like to actually work for a bunch of different, you'll have a provider who is like in a pure primary care space, is in multiple IPAs, right? So, or multiple networks, and they'll get their patients wherever they can get them. And, they're kind of payer agnostic. And I think you'll see that you'll have a lot of free agents in that space, in the virtual care space, who will basically probably, it's almost like a gig worker. They'll go ahead and drive for 3 different companies. They'll be on there and be in 3 or 4 different companies' networks. So I think you'll see that, and I think it'll help keep the relatively competition and size of that market, pretty broad, as opposed to 1 or 2 dominant players is my guess.
Just picking up on that, Rich, and sort of this overall consolidation theme. I mean, without getting too much into the legal details, one of the breaks on digital health, as we see it from a legal standpoint, is sort of this patchwork of state regulation. Most of these digital companies that have any kind of healthcare delivery platform depend upon the delivery of healthcare through this modality, but nevertheless, it's the delivery of healthcare by licensed clinicians, doctors, social workers, therapists, psychiatrists. And as everybody on the webcast probably knows, and I know you all know on the panel, the regulation of the delivery of healthcare still is primarily at a state level, not the reimbursement, which I think is at the federal level, and obviously state level with Medicaid. But one of the challenges we've experienced, at least at our firm, is the corporate practice of medicine laws, the various state licensure laws which prohibit out-of-state physicians, for example, from treating physicians in a different state, which is obviously what the telemedicine value proposition is. And there's been significant loosening of that in connection with the COVID crisis. But I think it was maybe Catherine who said that the COVID pandemic obviously has accelerated and taken barriers down in certain areas like behavioral health. And I'm just, I'm wondering, I saw something yesterday come out of CMS saying they were making the telemedicine remote monitoring payment permanent, but I'm kind of using sort of a rubber band, kind of concept that, have we stretched the rubber band pretty far with let's just say telemedicine and certain types of remote monitoring and digital health direct to consumer, such that when the COVID crisis comes to an end, hopefully it will, the band will snap back and we'll come back to what's probably a much, probably a normal that predated the COVID crisis in many ways, and people will start to scratch their head about some of these digital technologies? Or do you think, actually the band is pretty stretched out right now and it's going to stay that way? It may come back a little, but we have now set up a new normal. And all of the attractive features about digital health, convenience, cost, flexibility, confidentiality, those will all remain, and there'll be enormous pressure, or at least a significant amount of pressure, both on government regulators and payers like you guys, Rich, to keep it where we are. So where do you think we'll end up when the COVID crisis comes to an end? We have a vaccine, whether it's Moderna or Pfizer or whatever. Are we going to just recalibrate way back, or just a little back, and we are going to continue a significant momentum both on the investment and the care side with digital health? Anybody can take that if they want at the top, and we'll kind of rotate it around.
So I'll start. I don't think you're going to see states just completely drop their desire or their belief that they should have the ability to regulate healthcare within their state. I think you'll see a greater push for multi-state PACs to license, like you have with nursing and some others. I think that'll expand as some people see the benefit of kind of agreeing to a base set of standards for therapists, doctor, whatever it is. But I don't think all those walls are going to completely come down. They still, there's a political element to that. There's a dollar element in some states to that. And so I think you'll see more people be amenable to trying to make sure they don't prevent the expansion of telehealth and make sure it stays robust. But I don't see all those walls coming down. That's just my personal opinion.
Yeah, I mean, I think like a lot of things it'll vary. You know, I think behavioral health is probably a good example of something that will persist because there'll be evidence that the care quality and things can be, you know, pretty high in a digital setting, and I think it'll still be a mix. But I mean, if you think about what were the barriers to something like telehealth pre-COVID, you know, certainly one was reimbursement. You know, that it wasn't reimbursed at parity in many cases, not always, and some of that has changed during COVID. I think that it'll be interesting to see what happens there. I'd be surprised if that doesn't. Maybe it won't come all the way back, but if that doesn't come back a bit, because historically that had certainly been something I think that limited provider interest in adopting telehealth because that's a, you know, just less profitable. But as they can adapt and lower their cost to serve, I think it could be a viable model. I mean, the other thing that has changed, I think will persist, is just the patient attitude towards telehealth, because that was a barrier also. You know, many people had these benefits with their employers and they never used them because they didn't feel comfortable or didn't prefer it. And I think that a lot of those barriers have been broken down. So I think it'll come down to, there's certainly the economics of it. There's, you know, care quality and outcomes, which is just not every form of care is appropriate for a digital setting. But certainly some of it will persist.
Yeah, and the only thing I would add is I think certainly like it depends on what part of the market you're talking about. I do think that for, again, the lower acuity areas where it has gotten such high adoption, you're basically opening up users who were not users before. So in many ways, it's expanded, you know, the market for those kinds of services. I think the other thing is, even in the sort of the acute care setting, a lot of like my past life was all about, you know, how do you optimize capacity in these large health systems? And I think that's where virtual care can be a massive lever in terms of, you know, thinking about like for a given patient population, let's say you have a given panel of diabetic patients, and there's a certain regimen, a certain frequency by which all of them come in for their in-person visit, you know, once every X number of weeks or months. It's kind of crazy that we apply that sort of blunt instrument, that same exact protocol to everyone, whereas it's probably only a subset of those who maybe need to come in at that level of frequency. Maybe a subset need to come in more frequently. Maybe some don't need to come in at all. And I think that's where, you know, the ability to have asynchronous encounters and engagement with patients before they come into the clinic can, provide a lot more precision around how we do leverage the scarce resources that we have in the in-person setting to just, you know, kind of optimize supply and demand in a more precise way.
I want to just maybe shift a little bit. We've been talking about digital health. I think people can disagree, but our AI and artificial intelligence has been discussed a lot in the digital health conversation. And some of these companies we've been talking about have algorithms, AI algorithms that they use. We've been involved with a couple of deals recently in the behavioral health space to once again, substance abuse, where I think there's some penetration there on the clinical side. But I guess I'd like to get a sense from the panel as to whether, I think there's definitely been some traction with AI applications on the coding, revenue, you know, the our RCM side of the house with financial non-clinical applications. But I'm curious to whether you've seen anything that has attracted your attention in the AI space for healthcare that is, you think, on the clinical side that can really make a difference, and that rich payers are willing to at least directly or indirectly pay for. So maybe start, Julie, how about you? You're still on the screen, sorry, I can see here.
Yeah, I mean, I think there's early days, and I think there's, again, we always have to slice, you know, sort of what area of the clinical universe we're talking about. But I think probably the most recent and, you know, prominent example of a mini success story was this company Viz.ai, which achieved, first of all, has a product that is uses AI to drive clinical workflows, like real-time workflows around stroke triage. And you know, they have received approval, this NTAP approval for a specific type of reimbursement for their product that, you know, just creates a lot of great air cover for how hospitals and acute care facilities can actually adopt this solution. So I think they've done a very nice job of, number one, just identifying kind of an area of the market where they have a true, sort of killer app where AI really matters. It sort of fits into the clinical workflow, and there is a reimbursement modality that can be applied. The examples beyond that are definitely few and far between. I think imaging in general is sort of, kind of the major area where you've seen movement in this domain. I would also argue that, kind of, again, at the lower end of the spectrum, you see the virtual assistant concept, where I do think that has had meaningful operational impact. It's sort of light touch clinical triage to essentially determine whether or not you truly need to be referred to a clinician. And, certainly during COVID, we saw a huge wave of adoption of those kinds of capabilities simply to load balance effectively across our healthcare system. So, that's another area where, some of those capabilities came into play. And then I think, the real, one of the other areas where we obviously all, seek to see the benefit of AI is around risk stratification, for population health and just care management in general. And I think there's been early sort of examples of the use of these capabilities around, sometimes more transactionally around things like risk adjustment, but, across, more broader longitudinal care models as well. We've seen some of this in the Medicare Advantage populations where kind of the next generation of frontline tools are definitely being powered by AI to ensure that, again, the frontline staff are spending their time on the highest yield patients. So I would say, headlines still early days, but some clear examples where there has been either, clinical and financial impact or operational benefit in the last several months.
Yeah, I'll be honest, in my part of the world, when I hear somebody talking about AI, I'm more skeptical than not that they're trying to sell the sizzle that isn't really much of anything. But I'm certainly optimistic. I mean, I think, I've seen some of the radiology demonstrations of how they triage images, and it's pretty remarkable. So I think there are real things out there. And in something like that, what we're more often seeing it as a risk factor, because some of the companies we're investing in are larger, established. Is it going to be a disruptive factor? And so the question for us is sort of, is it a complement or a substitute for, what is sometimes more of a human or manual process over time? And I think it'll be a different answer for some things. It may be the case that AI can become a complete substitute over time. But I think at least history would indicate that healthcare is kind of slow to fully move to total technology. And so for a period of time, it'll be a complement to providers and other highly skilled professionals.
Thank you, Catherine. I'm going to take a question off the Q&A bar. It's the second to the last one. It's pretty interesting, and I think it actually goes to, I think one of the reasons I think Catherine, you mentioned reimbursement kind of trailed the COVID crisis and is sort of caught up. And I think one of the reasons for that, historically, particularly government payers are concerned with overutilization. And sort of all the fraud and abuse laws, et cetera, out there that focus on that. But the question revolves around whether, clearly we've seen a spike in digital health, but do we actually know if virtual health reduces costs for patients, especially if reimbursement is at parity with office visits and utilization increases? So that's an interesting question, and I think I'd be interested to know what the panel's thoughts on that are. Is there good data out there now that can demonstrate that these technologies, are not only more convenient and accessible and consumer friendly, but in fact they reduce costs and produce better outcomes? And there's one, Catherine, I know you guys have an autism platform. There's a couple of areas where I can think of outcomes measurements, can be particularly difficult. And, whereas on the other hand, other areas, substance abuse, maybe not as difficult if you can show adherence and lack of rehospitalization, et cetera. So I'd kind of like to know, it's more of kind of an underwriting question, I guess, in terms of investments, how you break that out. Anybody can start with that one.
Yeah, I'm not personally aware of any like specific studies or whatnot, but I think like there's a derivative sort of construct of, if you believe that, let's just use primary care as an example, like if you believe, based on many decades worth of studies that demonstrate that by implementing primary care models, you can reduce the cost of care for given populations over time, and we're talking like long periods of time, of course. So some of these studies just are kind of, there's a lot that goes into running those, but if you believe that, and therefore virtual care, can be viewed as a means to provide primary care access to a broader population, then you could sort of make that secondary argument that virtual is a means by which you can enhance compliance with care models that we already know to be cost effective in the long run. So that's sort of, one way to look at it. The other way to look at it, which we haven't talked as much about, is, it depends on if you're talking about fee for service versus, value-based care, right? I mean, we've all heard, the folks at IORA and Aledade and whatnot talk about how, during the pandemic, they didn't have to think about whether, they could get reimbursed for the use of virtual of telehealth as a means to engage with their patients. They just did it because they knew that it was the most just feasible and practical way that they could make sure that their patients were doing okay. So I think the mental model is very different in sort of, in the value-based primary care world, risk-based world, than it would be in, kind of more the traditional fee-for-service chassis. So I think this question, is obviously specific to the latter, but I think it's just worth highlighting the fact that there are areas where, it's not necessarily even the right framework to apply, because it's just one of many tools to drive engagement.
I agree with Julie. I think it's really contextual. I think, if you think of just any telehealth provider, who knows what the quality will be better just because you can go online versus going to a therapist's office and a brick and mortar location versus virtually. I think that remains to be seen. But if you think of virtual care as a kind of the front door, primary care front door, you can do a lot with that once that person's in, right? You can basically direct them to higher producing and more effective physicians in your network, right? Think of it as like a more of a steering concept. And in situations like COVID or other places where it could increase access, you're going to get people, and you're going to intercept that disease earlier in the disease progression, which is clearly saves money, and there's evidence of that it saves medical expense. So I think it really just depends on the context, but I do think as a tool used in the right way, there's no doubt it's going to save med expense in the long run.
The other, I was just thinking, I'm sort of piggybacking on what you just said, Rich and Julie. If you actually introduce behavioral health telemedicine at the primary care level, there I do think you can, and we're seeing different models come out where if you go in for your checkup, your normal annual physical, you'd also be getting sort of a mental health checkup as well. And I think we're seeing a lot of business models and a lot of investment interest, not only from the provider side, but from the payer side as well in those models. Really interesting activity there. So we only have a few minutes. I guess it wouldn't be a post-election webinar if I didn't ask the question about what the crystal ball, at least in your collective eyes, is with respect to assuming the election remains where it is right now, what digital health would look like under a Biden administration, again, assuming that remains where it is right now. So Rich, I'm looking at you. Why don't you kick it off?
So I think the Biden administration is all going to be about increased access. There's still a lot of underserved populations who don't have access to healthcare, and clearly digital is a avenue to provide that access. And I think you're going to see certainly policies and procedures to promote that. I think you're also going to see that with comes increased access, and you're going to be spreading the pie, I think, a little broader but thinner. I think you'll see some regulatory action and rulemaking that actually tries to limit what providers can make and payers can make, in connection with making sure that some of those dollars that gets taken out of one pocket gets spread across the healthcare spectrum. So I think we'll definitely see that, whether it's, pressure on RAF, coding, stars, all that kind of stuff. I think in a way to take some of those dollars and use it in order to increase access and maybe expand Medicaid. And, we'll see if we actually get a lowering in the Medicare age. I think that's a coin toss in my mind, depending on what happens in the Senate and whether, 60 maybe is doable. Below 60, I doubt. But I definitely think you'll see a lot of interest and a lot of rulemaking in healthcare in the next 4 years.
Julie, you
Yeah.
want to take a shot at it?
Yeah, I think, I don't think any of us would disagree that the near term, it's still going to be all about COVID and, sort of getting out of the situation that we're in now with regards to that. And so I would say, that to me is a net tailwind for digital health, just by virtue of the fact that we obviously, if COVID has done anything, it's just shown us how fragile our healthcare delivery system is from an infrastructure perspective, and that's really what's been the driver of just all of the digital transformation that's happening both in and outside of that care delivery chassis. So I think that's going to persist at least for the foreseeable future. I think certainly from a payment reform perspective, similar to Rich's comments, I think all of the movement towards value-based care and just payment models that just don't put significant portions of our providers at risk of going out of business if there are shocks to the system like this, will also be a net positive for digital health. In many ways, digital health companies are, perhaps again ahead of the rest of the market in terms of the payment models that they've embraced. Whether it's sort of on a PEPM basis or other membership type models, and therefore they again have been many of the companies that have sort of survived through this era because of that. And then, of course, it's worth also pointing out, just some of the regulations and policies around things like transparency and, even interoperability, I would argue, there's a lot of support around the table for those kinds of things that, again, I think, digital health companies are already ahead of the curve with regards to implementing some of the spirit of those policies. But, we certainly expect that incumbent providers and payers will expressly be looking towards the digital health industry for solutions to be able to comply with those regulations as they come into play.
I guess I agree with a lot of what's been said. One of the areas that I think in healthcare will likely be under pressure is pharma. And as we were talking about a bit, that is sort of a notorious industry where you look at the prices in the US relative to other parts of the world. You look at some of the intermediaries and the profit pools there that feel a little unnatural. And so I think that there could be, finally some regulation around it. I don't know that it'll be as disruptive as some of the scenarios I've seen, but anytime you have that kind of change, I do think that there may be some more, digital health and emerging innovation there, where it's been more dominated by the incumbents historically. So I think that'll likely be a net positive for the digital health, but a net negative for some of the incumbents.
Fabulous. Hey, one final thought or question, and we just have a couple minutes left here. But we've been seeing a lot of, I guess maybe starting with you, Rich, payer provider convergence, and frankly both ways. And there's been some up and down treatment with respect to the antitrust authorities in terms of larger transactions in that area. Some of the horizontal deals, I think, have gotten the focus of the regulators, but I'm curious if just looking ahead a couple of years ahead, do you see digital health continuing to expand as primarily a kind of a technology provider runway, or do you see the payer community, because that's frankly what's driving a lot of these valuations, not the fee for service, but the employer community, the commercial insurance community, really getting involved much more acutely as an investor on these companies and really driving the innovation from that side so as to really, frankly, staunch down some of the savings that we all expect to be there. So it's sort of it's not a question of who the winners are going to be in 2 years, but who are the players going to be? Is it, I mean, capital will always be there in one level or another, but I wonder if it's provider-backed capital, payer-backed capital, or some combination of the above. So in the next minute, if each of you want to kind of comment on that briefly, we'll sort of wrap up. Rich, since you're a payer, I think I'll pick on you first.
Yeah, so the whole payvider, as it's been referred to, yeah, I would say that we're interested in it, and I think it's more just because the digital technology overall, but you'll see it with the digital, has a real opportunity to be a disruptor. And, you know, I don't think anyone wants to wake up in 10 years and find out they've been completely disrupted. And I think, you know, where the disruption comes, a lot of is again, going after the consumer acquisition. And if you believe that ultimately, longer term, the government is going to be taking a greater share of the payer pie, which I think a lot of people do, then it really becomes who's going to service the members and if the payers ultimately the government. And so it's really a consumer acquisition play. And I think technology has an attempt to disrupt that. So we want to make sure we're not being disrupted. And that's why we're spending a lot of time, I think, in that space and thinking about that space for that reason.
Catherine, Julie, either of you have any comments on subject? I think we might have lost Julie, and Catherine, I'm seeing you, but I'm not sure if we may have gone over here. So maybe a good time to wrap up given the comments. And I know we're between the audience and cocktails right now anyway. So I want to just thank the panelists, Rich, Catherine, Julie, and you guys were terrific. Thank you very much for participating today, and wish everybody a good rest of their day, and we'll see you on the next health conference.
Thanks, Chris.
Thank you to Chris and to all of our panelists. If you'd like to continue the conversation, please join us on Twitter. And now, please welcome Master Mixologists Natasha and Rich.
Hi, everyone. Good
Master
afternoon.
Mixologist.
Like
Hey,
that
everybody.
title. I'm Natasha Soto-Albors.
And I'm Rich Dreher.
I'm a New York City-based mixologist. We're a couple. Rich is a certified sommelier. So together, we are Violet and Vine of New York. We focus on seasonal cocktails, and during the pandemic, we've been spending a lot of time together. For better or for worse, mostly for better. But we have had the pleasure of doing a lot of virtual sort of cocktail education classes, and we found that people really want to up their cocktail game at home, and that is what we are here to help you do.
Because that's what we like to do at home every single day.
Absolutely. And it's also just one of our favorite seasons right now. Moving into fall, so many great flavors that we can play with, baking spices, orange, seasonal fruit. So we wanted to get you ready for the holidays. I think an advantage this holiday season, I know it's a bit of a bummer that we have to be gathering in smaller groups. However, the fact that you're not making drinks for maybe 25 or 30 people
Not that
means,
you would be doing that.
right, but means that you can actually do some pretty complicated, not too complicated, but a little more involved cocktail making for an intimate group of friends. And we have two to share with you today. The first one, Rich is going to talk you through, and it's called Thanksgiving Movie.
I chose that name because I like Thanksgiving movies. And this was a cocktail that was sort of inspired by that moment right after you eat turkey, you just did the dishes, you're about to sit down and watch a Thanksgiving movie, and you need something for the tongue. So this is that. And one of those flavors that I think really reminds me of Thanksgiving in particular is orange. And the holidays in general. I think it's a real like underdog flavor. Cranberry sauce wouldn't be the same without orange peel. Orange is when you're sick, eating them, drinking the juice. And it really is, to me, fall and winter in a glass, if you will.
And it
so
is like a winter fruit, right?
It is
citrus,
a winter
yeah.
fruit. As you're moving in and through the winter time, oranges, lemons, limes, all of those citrus fruits are going to become more and more prevalent and riper and more delicious as we go through that season. But today I was just in the supermarket and I saw these great looking blood oranges, and they were, nice and round and heavy in the hand and juicy. So I decided I would make a cocktail out of blood orange, inspired by that moment that I spoke about earlier. So I'm going to use bourbon as my base, perfect fall sort of liquor base. Has that really nice sort of malty sweetness to it, little bit of spice from that oak aging that it takes. And then to bolster that orange flavor, I have Campari. People don't necessarily associate Campari with orange, yet it's one of the main flavors that goes into making it, bitter orange in particular, and then gentian, which is the drying part of what makes Campari Campari. And then we have some orange bitters here. I'm using Regan's, the classic, rest in peace. Just a really perfect, like nice sort of cologne hit at the end of everything. So the way that we're gonna build this drink, it's gonna be a shaken cocktail, but I'm gonna use 1 ounce of bourbon, right to the top there. And then I've made this vermouth that's been seasoned with mulling spices. There's a little bit of apple, dried apple in here, allspice, star anise, cinnamon, all of those wonderful fall flavors. And I used Carpano Antica. If you don't have this, get it. This is like almost 2 liters of liquid, and it'll last you a lifetime in the refrigerator. And it's got that beautiful vanilla sort of caramel roundness to it. So I'm going to use a 1/2 ounce of that infused with those beautiful fall spices. And then I have here a reduction that I've made of blood orange and a little bit of local honey from wildflowers. So this is also honey in the raw. It has that waxiness to it. Also helps to bolster the character, the viscosity. So I'm using 3/4 ounce of that, and you'll see the beautiful color that that imparts, along with the color that Campari imparts. And I'm going to use a 1/2 ounce of that. And then at the end here, just a couple of good hits of orange bitters. My wife is very kindly giving me a spear of ice.
We're using our hands, obviously we're making it for ourselves. If you're doing this for guests, tongs are great, gloves are great. We should all be really aware of how we do those things at the moment.
Got my vacuums broken here. Now I'm using my Hawthorne strainer and my fine mesh strainer so that I get all those nice little particles out, because I did use just the raw blood orange. So it does have some of that pulp.
It's such a pretty color when you see this. It's definitely got that bright, vibrant, dark red that we associate with the holidays. But I love that we're using blood orange because I think people go to cranberry first, and this is something that gives that color, but it's totally different.
But you'll be surprised at just how much this will remind you of cranberry sauce in its flavors. Then the last thing I did for a garnish, and you don't have to do this at home, you can just slice straight through a blood orange and put it in there fresh. But I really like this because it becomes, I'm gonna show you real close. It becomes like stained glass. So what I did was I sliced blood oranges very thin, and I put them in my little dehydrator, not just a home dehydrator, Romco, I think is the one I have. And I make them, and I let them go for about 6 hours until they're almost chips, nice and hard. And then I just pop that right on the top.
Beautiful.
And you have this beautiful stained glass effect. If you have a candle on the table, it shines right through it, makes things look really, really sexy. Oh, man.
Amazing. And if you don't have Campari at home, or if you're a little afraid of that really bitter component, you could probably try out Aperol, which is a little softer, and just play with your proportions. Not everyone is like a bitter fan. We are, but yeah, you can always play with that.
The sweet vermouth, you have that really nice balance there. And you can always up the proportion of Campari if you want it a little more bitter, and so on.
So that is Thanksgiving movie.
Thanksgiving movie.
Enjoyed on the sofa after your feast. I am going to show you a zero-proof cocktail. That's what we like to call our mocktails. Big philosophy that we have is that mocktails do not need to be boring. So they can be as complex and as rich as a regular cocktail. Today, I wanted to play with apple flavors because, of course, we're going into fall. Apple cider, kind of like sitting by a fire, all those feelings come up for us. And I also wanted to use ginger because, in particular, I think that ginger is one of those great fall flavors, and it gives us a little bit of a spice quality as well, which is wonderful. So I'm going to tell you a little bit about my ginger syrup that I make. This is going to be a staple in your household. Instead of just infusing simple syrup with ginger slices, I take about 5 pieces of ginger, medium sized. I slice them, and I actually put them in a blender with brown sugar. About 5 pieces of ginger cut up in the blender, 3/4 of a cup of brown sugar. Light brown sugar works, dark brown sugar works. I did 50-50 because I kind of like that in between in terms of richness. Once I blended that, I run it through a fine mesh strainer. And basically the result is almost like a combination between a ginger juice shot and ginger simple syrup. It's incredible. You can put it in tea, you can put it in Moscow mules, you can put it in my cocktail, which I've called sweater weather. If you're an SNL fan, you know what that's referring to. So sweater weather, I have regular apple cider to start, and I'm doing 1 ounce of that. Goes right into my shaker. And then I'm doing 1/2 ounce of Seedlip. Seedlip is a non-alcoholic distilled spirit that is available on the market. It sort of is reminiscent of gin, except it doesn't have any alcohol in it. They basically use botanicals to infuse a clear, zero-proof spirit. So I'm doing 1/2 ounce of the Seedlip. I chose the Grove, which has, again, wonderful orange flavors in it. Then I'm doing 1/2 ounce of my house-made ginger syrup. Amazing. And then I am doing 1/4 ounce of lemon. Fresh lemon juice. Always makes a difference if you can juice things fresh. We really encourage that. I'm going to add ice.
Fresh citrus goes a long way. You know, 1 lemon will make you about 1 ounce.
You want to shake for a long time until you really get that feeling of the shaker being cold and a really good vacuum seal, which apparently I got an excellent vacuum seal. I'm going to hand it to him to break for me. Amazing. So this is where like a helper comes in handy sometimes.
I'm a helper.
So I'm using this really cool sort of fluted highball glass. It almost looks like an old champagne glass.
It's from my grandma's basement.
Yes, it is an inherited heirloom, which is kind of fun for the holidays always. I'm double straining through a mesh strainer here. I want to get any kind of residual, like little ice pieces or anything like that out of the drink. So now I have the drink in my glass. I'm going to add a few fresh ice cubes. And to top it off, I'm doing just a dollop of sparkling cider, very, very little. Now, if you are doing a bigger glass, you can go a little bigger with the sparkling cider, or you can adjust the proportions of the drink. For my garnish, I have candied ginger and freshly sliced apple, and that's going to go right on the rim of the glass, balanced like so. And that is your sweater weather cocktail. So something, cheers.
Cheers.
Something to enjoy on Thanksgiving. With this cocktail, if you wanted to try a version of it that incorporated bourbon, it would actually be very delicious. So it can be done as a traditional cocktail as well. So I hope that you'll try these out at home with your friends and family, or just by yourself when you're sitting on the couch.
Absolutely.
And we wish you a very happy and healthy holiday season. Again, we're Violet and Vine of NY. You can find us on Instagram under that name, and we're always happy to answer cocktail questions.
And wine questions.
And wine questions. And we post a lot of recipes on there, so you can check that out.
Follow along.
Thank you so much. It was great to see you all this afternoon, and enjoy the rest of your day.
Happy holidays, everyone.
Thank you so much for joining us, everyone. Have a great rest of your week.